Hello everyone, welcome to the Real Life Trading Morning Program where our mission is to enrich lives. My name is Brad Reed and I am a real life trader, and I'm here reminding you to be good, and by good I mean get out of debt, achieve your financial dreams, and give generously to your community. Today is June 20th and it's a bit of a slow day in the market, and so we started talking about how to day trade, not how to day trade, how to swing trade bearish IRA. So a swing trade is anything that is held for a couple of days to a couple of weeks, and this strategy, I guess, can even go for a couple of years if you want to. At any rate, the question is, how do you trade bearish in an IRA? And the answer is a vertical spread, sometimes called a debit spread, sometimes called a bear put spread. I'm going to look at Apple here because I've been bearish on Apple for a little bit. I'm the only person that I know that's been bearish on Apple, but this is kind of why I'm bearish on it. To me, it's been making lower highs, it's been making lower lows, and just here recently, it poked through this 92 area, which has been a strong support for over a year. Apple poked through that, made a lower low, and then formed this little guy, this double top here, right underneath the 100 simple moving average. And so to me, that's a pretty strong bearish signal. By the way, since I'm on the recording, I'm going to brag about my mom. My mom bought Apple somewhere around in here, did a dynamic collar on it, which means she sold a covered call and bought a protective put. And so what ended up happening is she sold the stock when it broke the neckline of this double top, made a profit on the stock. Then she made a profit on the protective put, and then she made a profit on the covered call. So way to go, Mom. And if you want to learn how to do collars, swing over to www.reallifetrading.com, and there is free education there. But today, this video is about how to trade stocks bearish in your IRA. So what you're going to do here on Apple is you're going to first buy a put, and in this case, it would be the 95 strike put. And let me change this to buy. And I usually do these about at least a month out. So I'm going to buy the July 22nd 95 strike put. And then I want to sell 94 strike put. Just because I'm a little bit obsessive, I'm going to put that right at 95, and I'm going to put this exactly at 94. And this next one is going to be sell the July 22nd, want to do the same time, 94 strike put. So I'm going to sell this put down here. That's going to offset the cost of buying this put. Now, because I've bought one here and I've sold one here, and they're $1 apart, my maximum profit on this trade can be $1 per share. That's it. I'm capped at $1 per share. But my goal is to get into this at 50 cents or less per share, and then I can get a 2-to-1 or better. And most people I know are pretty happy about doubling their money in a month on a trade. So I do have the Apple option chain pulled up over here from Finance. As you can see, I've got July 22nd, 2016 here. Now scroll down to the puts. I see here that the 94 strike put would sell for $1.88. So I can sell this one for $1.88. And I would buy the 95 for $2.27. No, excuse me, I'd buy it for $2.34. $2.34. Now I will take another sidebar here to say at reallifetrading.com, I recorded a video about a month ago about how to negotiate and how to get better credit fills, or how to get better fills on options. So one thing that you can do is offer your broker somewhere in between these two. So instead of selling that for $1.88, I'd ask my broker to sell it for $1.90. And instead of buying this for $2.34, I'd try and do it at $2.32. So instead of going $2.34 to $1.88, let's see, buying at $2.34, selling it at $1.88, and that ended up costing me 46 cents. I could probably get this for 42 cents, but at any rate, let's just say 46 cents is my cost for, let's see, my cost is 46 cents. And if Apple goes down to 94 or below, my profit would be $1, and that is better than the 2-to-1. Depending on how, it might be exactly 2-to-1 or around 2-to-1, depending on your commissions. But this is how you can do how you can trade bearish in your IRA. Again, it's called a bear put spread, or a vertical spread, or a debit spread. But if you go to just about any website like investopedia.com, you can read up on the strategy, or you can just email me, Brad at reallifetrading.com, on how to do a bear put spread. If this is the first time you've been doing it, I suggest you do it virtually for 20 to 50 times, maybe 50 to 100 times, because if there's anything you don't want to screw up, it's your IRA. So be sure you practice this strategy and you understand how it all works before you do it with real money in your IRA. Obviously, trading involves risk, and there's always risk of losing money. But the cool thing about a trade like this is no matter how wrong you are, you can't lose more than your initial investment. Whereas if you were just to buy shares of Apple, it could literally go down to zero. Probably not going to do that. But again, like I said, I'm about the only person that I know that's bearish on Apple. Most people that I know are bullish on it. But if you were to trade Apple bearish, and I'm not suggesting that you do, but if you were to trade Apple bearish, this would be one way to do it inside an IRA. If you have any questions, feel free to email me, Brad at reallifetrading.com. For more videos like this, go over to our website, www.reallifetrading.com. And thanks for watching this video. Trade on logic, not on hope. Have a good one.